Good day, everyone. I welcome you to the fourth lesson in this Forex training series. In today's lesson, we shall be looking at an aspect of Forex trading that is very, very important, and that is how to analyze the market. How to analyze the market for you to know when to buy and when to sell. It is very, very crucial, because once you are able to analyze the market well, it will help you to do well in your trading career. So now I want us to look at the types of analysis. Generally speaking, we have two major approach you can give to the market before you position yourself. And the first one is the fundamental analysis. The second one is the technical analysis. But let's look at the fundamental analysis first of all, before we go to the technical aspects. Now, what does fundamental analysis, what does it focus on in Forex trading? Fundamental analysis focuses majorly on the underlying causes of price movement. In Forex trading, there are some forces that moves the market. Before the price of a particular instrument will go up or down, something must have moved it. So the basic force that moves the market is the kind of news that comes. I told you in the last class that economic news that is being generated, that comes out or come up in different countries, determine how their currency will be. Either it will be strong or it will be weak. So one of the major underlying forces that causes or influence price movements is economic news. So you might have an economic news, you might have a social news, you might have a political news that will force the market to move up or down. So these are the things that drive the demand and the supply in the market. So for us to have a clear picture of what I'm talking about in terms of fundamental analysis, there is this popular website where economic news are being listed from time to time. You can you can just log on there and look at it. It's www.forexfactory.com. There, the calendar, the news calendar is there, week in, week out. For example, the one that I'm showing us here is for this week. That's May 10 to May 16. So you will see the list of the economic news there. It will give you a table, and then you see the several figures that are there. I'm going to briefly explain what you will see in that on that website. I will quickly explain to you. You will see a column where the currencies of different countries are being listed. Okay, let me start from here. The first column has to do with the date and the time, and then the second column has to do with the currencies of each countries that have their news being released at that the corresponding time. Then apart from that, you see another column where you see different colors. You see yellow, you see orange, you see red, and then you see another column which is the description of the news. You see another column where you have something that is like folder. Once you click on that one, it will give you details of that particular news, the further information about that particular news. Then you see another column, that is where you see the actual data that's being released concerning that news. Then you see the forecast concerning the news, and then you see another the other column there that is talking about the previous data that is being released. See, in a simplified form, let me just say this. Generally speaking, every economic news comes with a data, except if it is a speech, like the speech here, the FOMC member that spoke here. When you see maybe a central bank president that speaks, or you see maybe they say the president is speaking, that one will not have any data. But do you know that just a statement, for example, just a statement from Trump can just shake the market? Just a statement from Trump can just shake the market. So when important dignitaries talk in their country, it shakes their currency. It might either weaken it or strengthen their currency. So that being said, I want us to look at this area. Generally speaking, when you have the previous data of any economic news, that means that's the last figure that was being released. Then, based on the analysis of economic analysts, they can do some forecasts. They do some forecast of what is likely to be the figure of the next news release. Then at the time when the news is being released, this column where I'm pointing to will then come up. So each of them, we are seeing all of them now because all these news are already released. But if you go to the calendar of next week, you will see that all of them, most of them on this particular column are yet unfilled. But you will see the previous and you will see the forecast. So whenever any news comes out and it comes in red, that means it is negative for that currency. Let me give you an example here. This is Japanese yen, JPY, Japanese yen, and they have a PPI news year by year. You also year over year. So when you look at it, you see that the previous was minus 0.4%. They forecasted minus 1.4%. By the time the news came out, it came out at minus 2.3%, which was far lower, as in it's a negative one for that particular currency. So if you are looking at peers that have the Japanese yen to trade, that means you will favor other currencies that are being paired with Japanese yen as at this time of trading. So apart from that, you see these different colors here, which the key has been highlighted in this place. When you see any red color attached to any news, that means the news has high impact. There is tendency that it will shake the market very well. When you see the orange color, that means it has medium impact. That means when the news is released it will affect or shake the market in a medium way. Then this yellow one means that it will have low impact on the market. So you should not expect too much movement in the price of the currency if it is yellow. So most of the time, traders look out for news that have this red color and that has this orange color. We bother less about news that have this yellow color. I think we get that. If there is any question, you can let us ask. You can just go through the other keys here. If you are having a green number, I've said that before. If you are having a green number, that means that the news released is better than the forecast. and it reveals that it's good for the currency. If it is red color or red number, that means it's worse than what the forecast was, and it is negative for the currency. And then we have all these other parameters that you see being attached to all the news. That being said, I want us to move to the technical analysis. Let me say this: we have different types of traders. Some focus more on fundamental analysis, some focus more on technical analysis. For me personally, I dwell more on technical analysis. We have other traders that combine both technical analysis and fundamental analysis. But anyone you eventually find interesting, you follow. But sometimes, even when you do the technical analysis, you need at least little knowledge of the fundamental analysis, because the forces that move the market, before it's being reviewed from the technical in the technical point of view, it is caused by those fundamental forces. The economic news, it might be an economic news on interest rate, it might be an economic news on manufacturing, it might be an economic news on the sentiment of consumers. So all those economic news, for example, if the confidence of consumers increase in a particular country, that means their economy will do well, because people will buy, they will buy more things. So let's quickly talk about the technical analysis. In our subsequent classes, we are going to dwell more on this technical analysis, but let's just get started with it in this lesson. In the technical analysis, it focuses more on the price movement by the use of historical charts. It studies the price movements by the use of historical data, historical charts, the direction that the price had moved in time past. There is one interesting thing in forex trading, and it is the fact that price moves in cycle. I will use a practical illustration for us to get what I'm saying. If you check the price of crude oil, of palm oil, for people that are dealing in palm oil, you see that year in year out they go to the villages to go and buy palm oil when the price is low, and then they store it for a few months, and then they bring it out to the market to sell when the price is high. You see that on yearly basis they know the period when the price of the palm oil is lower. For example, in Nigeria now, I think this period is a very good time to buy the palm oil. They go to all those farms, they buy them and they keep. So in few months to come, around October, September, October, November, they start selling. For example, if they buy at around 7,000 or 7,500 now, by that time it would have gotten to like 10,000 or 11,000. So based on the experience of this year, they can project what will happen next year. Based on the projection of last year, that okay, last year 2019, the price of palm oil went from assuming from 5,500 to 11,000. Okay, this year now they will now start looking at the price to see if it will come down to that 5,500, so that they can buy again. But in case it doesn't get to that 5,500, they know that at certain points last year it went from the range of that price, it went to 11,000. So they will buy at whatever price. For example, at 7,500 now, expecting that this year it will get to 11,000 again. So in forex trading too, when price moves like that, price moves in cycle. It moves in cycle. If it has gotten to a particular level before coming down, there is high probability that anytime it's going up again, it's likely to get to that point before coming down. I know we are going to get it better as time goes on. So for the technical analysis, what we use most of the time is the chart. We use charts. Charts are a visualized representation of price movement. It reflects the psychology of the players in the market. That is the interaction between the buyers and the sellers. So it actually gives us a picture of what is happening in the market per time. So concerning the charts, we have different types of charts. So when we look at the chart, it's able to give us what has happened in time past, and from there we can project what will happen in times to come. We have three major types of chart. I'm quickly going to mention them. The first kind of chart we have is the bar chart. And this is how it looks like. This is the bar chart. We have the bar chart. The bar chart doesn't really give much information, but we are going to look at the other type that give us more information. This is how the bar chart looks like. That's number one. Then two, we have the line chart. This is the line chart. The line chart also does not give us much information, but it is best used in getting to know what the overall trend, the direction of the price. It's better used that way. But we now have the third one, which we call the candlestick chart. The candlestick chart is the one that is mostly used by traders. We can see this is how it looks like. You see like candlesticks, it goes up, and the candlestick charts gives better information about what is happening in the market. For example, it will tell us when the buyers are having more hand in the market and when the sellers are having upper hand in the market. Once you know the winning team per time, the market is like a tug of war. So it has the bears. The bears are the sellers, the bulls are the buyers. The bear are the sellers, the bull are the buyers. When the price is moving up, that means that the bulls are in charge. So we say the market is bullish. But when the sellers are in control, the bears, we say the market is in a bearish movement. So this is the example of a candlestick, and this is how it looks like. Most of the time it has this red is representing a bearish candle, and this blue one is representing a bullish candle. The red is representing a bearish candle, the blue is representing a bull candle. Most of the time you see candles having a shadow, like the one you're taking this red one as an example. You have a line on top, you have a line below, and this this red colored part is called the body, and then the line you are seeing above it is called the wick. It's showing the high price of that candle, and this down part is showing the low of that candle. For a bearish candle, you have the closing price being lower than the opening price, but for a bullish candle, you have the opening price being lower than the closing price. You will see that in a bullish candle, the opening price will usually be lower. For example, if a particular commodity, let's say cocoa, you see the price of cocoa at, just for an example, you see it at $10, or that's $10.0 per ton. So if at the end of a period, maybe at the end of the day, at the end of the week, at the end of the month, it now goes from that $10.0 per ton to, let's say, $15.0 per ton, that is a bullish market. That is a bullish candle will be formed to represent that one. But if on the other hand it goes from 15, let's say this is the opening price for a bearish candle, which is usually high, let's say it's $15, and it now goes from that $15 to $10 per ton. That means the opening price, the closing price is lower than the opening price. In that kind of instance, the market is said to be bearish. Let me stop here for today while we reflect on what we have talked about so far, and then I continue from there in the next lesson. So today, just for a recap, we have talked about the types of analysis. We have fundamental analysis, we have technical analysis. The fundamental analysis forms the underlying cause of, we are looking at, when we do fundamental analysis, we are looking at the underlying cause of price movement, which can be as a result of economic news, social news, and political news. And I also talked about the Forex factory, where you see the news and outline and highlight of the economic news that is coming out from time to time for different currencies. And we also talked about the technical analysis, which has to do with looking at historical charts or historical data to analyze where the price might go in the coming days. And then for us to look at the technical analysis, I said we use charts. And the three types of charts that we have the bar chart, we have the line chart, and we have the candlestick chart. And the candlestick chart is the most popularly used chart for technical analysis. Thanks for watching and listening to this lesson. In the next lesson, we shall be dealing more with some aspect of the technical analysis. Thank you.